Hey guys, Mike here. So today was all about the news. I mean, there was so much news dropping in the morning on so many different mega cap stocks that was driving them either down or up, and mostly down, by the way. And we'll get into that. I mean, you can almost tell the market's just kind of sitting there waiting on Wednesday, right? Which of course is FOMC. Fed's going to come out. We know a rate hike is like 99% sure they're not going to do it now, so got a 1% chance. But the question is on the pause, right? And so we're going to get into all that and stuff and the news that was driving these stocks up and down. But there's a couple of things here, and one I definitely want to get your opinion on because I don't know if it's one of those indicators. Is it just broke again? Is that's what's happening because of, obviously shutting down the world and all these other things seem like they're broken or not? But, again, we'll start off here with China because when it comes to China, I mean, supposedly they're practicing a blockade of Taiwan now and all this other crazy mess. But I want you to look at this. And this is what I'm talking about. This is what people are so worried about. And while they're, really not heavy into Chinese stocks at this point in time, and it's because, the Chinese property market is likely the largest asset class in the world. These are in trillions of dollars, right, in U.S. dollars, okay? The residential property sector in China, $62 trillion. And you see fixed income and equities, right? Well, you see in America, $34 trillion. See over in Japan, only 10, UK's 10, 6, all that good stuff. And then you look at what they do with the stock market. See, that's why they don't care about their stocks over there, because it just doesn't make it up a large part of what they're actually invested in. It's all about this real estate market, which is a hot mess. And I mean, if you don't believe that, you go over here. Look at this. This is just came out yesterday. Contracted sales by value yearly. Evergrande, Country Garden, right? You can see going up from 2010 to 2020. Boy, they were killing it. Look at coming down. I mean, it is just horrible. And I mean, it's so bad that, for example, Country Garden, their largest privately run property developer, lost $7 billion in the first half of the year and has $186 billion in liabilities still left on the books. The sales of the new homes are down 70% over the last year. And so they're dealing with that pressure. And then what's happening? People are pulling out of the stock market, and then you got this came out today with, FX, right, which is the currency. And so they just had their largest FX outflow since 2016, right, amid, of course, the sudden surge in capital flight, because obviously people aren't wanting to invest money there because they don't know what the growth is going to be. I showed you, what was it, Thursday, I think it was, when the projections are now, they don't expect hardly any growth coming out of China and stuff, but it's really just the real estate market that still has everybody so worried because they've been doing what? Stimulus, been trying to cut rates and cutting this and cutting that. And so far, it just hadn't made things bottom yet. So, I mean, that's what people are kind of waiting on. And will you get the same pop you got here? Because usually when things are at their worst, that's when you usually will get it. But you can see in the Chinese stocks, kind of like, we're just not sure. And obviously, the only way stocks go up if you get inflows and stuff. And I don't know. Let me know what you think down the bottom. That's going to happen. Who knows? I mean, again, they control their banks. So we'll see if they can pull, themselves out of this nosedive or not. And the other thing I was going to talk to you guys about was, maybe this is just another indicator that's broken or whatever. But this is, it says produce more but earn less, right? So this is the difference between GDP and GDI, which I'll show you what that is in just a minute. You see the spread, right? Well, we haven't seen this since when? 08, 09. We know what this was, the great financial crisis, right? And you can see they almost pretty much look identical, especially the spread. And so, when you look at this, what's the difference? Because we don't, nobody hardly ever talks about GDI, but both of them are measures of our economy's activity, right? So GDI is what we earn in wages, profits, and taxes, okay? And of course, what drives the economy is spending, right? So GDP counts for the value of what the economy produces, goods, services, and technology. Well, of course, hence the title, produce more, earn less, right? And what's crazy though, I don't know, I mean, maybe GDI, something people, maybe it's not as accurate as it once was. And the reason why I bring that up is because what really drives the economy now more than anything, it's us spending credit cards and taking out loans and stuff, right? And we do it more than ever. I mean, look, here's 08, right? Consumer loans, credit cards, and other revolving plans with all commercial banks. And as you can see, we've 2.5x'd what we used to put on credit cards and revolving credit lines. And I know a lot of people are going, well, that's because we're a bigger country, but not really. I mean, you look at the population, it was like 305 million back in 08. It's around 330 million now. How many of those are kids versus adults? So it's like, not really. I mean, not the 2.5x your credit cards and revolving credit lines and stuff. to be spending. And again, it's because of what? I mean, what do we got now that we didn't have back then? And guys, if you get anything out of this, please hit that like button. It helps people find this video. And if you like the content, think about hitting that subscribe button down in the bottom. I just think it's the way we function now. You look at that chart and you see these huge spikes up, right? Going over here. So yeah, something has to do with population increase, but nowhere near can that account for what we're doing now. And so, and again, how many times you ask yourself, like, how in the world can consumers be holding up? Every time we get the shopping numbers out, every time you see the stores and everywhere else and the travel numbers and everything else, still doing it. But it's because people are just, we're so used to. I mean, who carries cash anymore? Do you carry cash? I carry like maybe 20 on me, if that. But most of the time I would have no cash on me. Plus now you got the buy now, pay later companies that are coming out, right? And so it's just the way things are going. So I don't know if the GDI number really accounts as much as it or really is effective when you look at it as it used to be. I don't know. Let me know what you think in the comments on that. But I don't, you know, we're talking about pushing the economy up. I don't think it has to do with so much how much we're earning anymore. As long as you make those minimum payments, you know, it's all good, right? And so I don't know. I saw that and I was like, okay, let's see what people think about it. Now, the other thing is what's going on in the S&P here, right? You got the futures. You know, these big bets on being short are moving up now. And so they aren't as short as they were. But when you look at this, you know, is this just the cycle, right? I mean, you see where these lines are right here, the same kind of pattern. And what was going on here? We were in the stock market basically either crashing or dropping down between like 15 and 20% during those time frames. And so that's what we're in now? Are we getting ready to make a big move up? Are they, you know, planning out for seasonality, getting us geared up for the fourth quarter? You know, that's what we got to figure out here. Now, when it comes to the Qs, I'm not going to spend a lot of time on these indexes because they really didn't do anything today. Shocker, the IWM was still red. Can't believe that. But, you know, you look at this right here. Obviously, we're below the 50. We're sitting on some major support. It went down that trend line, which we added yesterday, right? So, you know, the big question is going to be, will we come down, get a bounce, stay in this range right here or not? Or this trend line I'm putting in here, you know, are we going to start wedging ourselves, right, in this little pattern here? That's what you're seeing on all these different stocks and everything. We start heading up and just kind of staying in this range, especially with FOMC coming up Wednesday, or will it make a big move after that? That's what we got to see. You know, Apple, big move up today, up over 2.5% at one point in time, almost 3%. And why? Because here comes the iPhone numbers, right? The pre-orders are looking good, supposedly, and all that good stuff, outpacing supply. So as Apple goes, the market was trying to go. So it gets this big bump up. Obviously, you still have resistance right there. MACD is trying to turn up, still below that 0 line. RSI is trying to turn up and get above that 50 line right there. If that happens, we all know that's bullish, right? And this is Apple, okay, largest owned stock probably in the world. So keep that in mind right there. If it does not, here we go right here. And this is what we're talking about. They have been defending this 274-ish level, you know, like their life depends on it. Because they know if they don't, we're coming down to fill this gap. So let's see if we get more news out tomorrow that pushes this up. And let's see if this double bottom pays off, right? They finally got this double bottom right here. The target will be somewhere right before you get into that big gap right there. It's around 187 or whatever. That's a big move. Most of these never play out to the T, but just keep that in mind. You're going to see a lot of these double bottoms, double tops, right? Tesla, double top right here on the hourly chart. That puts us right down in that gap. It was down 3% today. Of course, what happened? They end up getting I guess you could say a downgrade from Goldman here. They lower profit forecasts because, you know, Elon has been lowering prices and stuff. And so, you know, that's the reason why they're doing it, because of the narrowing margins, blah, 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 blah. It's not like we hadn't heard this before. But when you look over here, you know, it started to lose this at the end of the day, this trend line right here, which we had talked about. And this is the trend line. If you pan out here, it goes back till June. And so that started to get lost today. And understand, gaps, when you gap up in a market, which is what that is, those are less likely to fill than a gap down, which is what you see is right above it. I don't have the exact stats. I've been trying to find the exact stats so we could all learn something together on that. I just know it's true, because you go back in the Tesla chart and you'll see plenty of gaps that aren't filled that were gap ups, right? Because it just never went down to revisit that or whatever. Whole bunch of gaps filled, though, when it fell down to 100. But, you know, then we talked about it Sunday. Which way are we going? Are we going to fill this gap first and then bounce? Because that's pretty much what's going to happen. If that's the case, or are we heading up this trend line, which is where those other gaps at? Or again, you see the MACD, they're trying to like turn over, but again, there was call sweepers coming in this morning trying to save it, and it just didn't work out. Now, NVDA, total, I would say head fake, but really just total technical thing, right? Drops down in the morning, it's like, oh man, down 3%, people freaking out. And it's because Taiwan Semiconductors came out, I think it was Friday or Saturday, and said, oh boy, we're worried about slowing demand and everything. And so boom, but then of course what happens? We hit this trend line right here to the penny. Now what is that trend line right there? And we talked about this, we're in this channel, right? So when we zoom out, you can see right there to the penny, hits it. And we go to the weekly, this will pop up. You can see that channel we've been in. That is the trend line it hit. All right, we've been in that channel since April. And so we'll see, are we going to get this bounce and move back up to the top of the line? Or is this just a fake out? So that's what we got to see right here. And, you know, when you go to AMD, this basically was kind of saved AMD, right? It was heading down as well. And it kind of goes with NVIDIA. And so NVIDIA pops, it pops, boom. You see another double bottom putting right here. Also, that year-to-date anchor view up right there. 1, 2, 3, 4, 5, 6, 7 bounces. So this will make number 8 right here. Pops up, starts heading back up a little bit. Not that big a day for it, of course, compared to NVIDIA. But that was a big move. I mean, like 4%, like 4.5% move on NVIDIA from this morning and stuff. Congratulations to anybody that caught that one. And so again, now you're going to have all this resistance stuff above right here, you know, and we'll see if this is going to continue or not. This is FOMC week. Again, the day was one of those like weird type of days with price movement almost non-existent for most stocks, just sitting in ranges. Amazon, I think what I'm looking on this one is this support level right here, which would line up right here with this trend line where it broke out. And, you know, you like to come down and see a retest, turn that into support, and then bounce. That would be really nice. Obviously, at that point in time, it could start heading up to around like 147, 148. But you can see on the daily, I mean, the MACD looks like it's trying to take a break, come over. RSI is heading towards that 50 line, of course. We talked about this double top right here, where it's like, you know, equal highs, whatever you want to call them. And so, you know, will that play out? We'll have to see and stuff. And again, a lot of this will be figured out come Wednesday when Jerome Powell speaks, and whatever the market wants to hear, it's going to hear. You know, again, this is what I'm be looking for right here, because also the 50, which is pointing up, was actually going to line up perfectly with that. And what we talked about was last week when it was on the 50, what was going to happen? It was going to bounce, right? Because it is one of those stocks that respects this 50 moving average until it doesn't, okay? Now, only thing you're looking at, not really, Tuesday earnings, AutoZone, and then there's no data that should affect it. I mean, there is housing market data, but, you know, we'll see how the market wants to take it. Because we all know what the housing market is doing, right? Nobody's buying existing homes because people like us aren't selling. And then they're having to be forced into these new homes, of course, at these higher prices and higher rates, because the home builders can actually make them deals and get them in at the lower rates versus if you were going in an existing home. And people don't want to rent because rents are really, really high too, right? And so, you know, but we'll see if the market wants to be affected by that. I don't see why it would or anything. And you know, sometimes we get some crazy moves like on the day before the FOMC meeting and stuff. So it'll be interesting to see what happens. Let me know what you think down there in the bottom stuff. But a lot of stocks, what'd you see there? A lot of double tops, a lot of double bottoms, you know, wedging themselves in these patterns, ready for breakouts. And it's like, it's, you know, not an accident that FOMC is Wednesday. And again, we know 99% chance of not do a rate hike. Nobody cares about that part of it. Just has to do, will he utter a word that makes them go, I think he said pause. And we've seen it before, right? We've seen the movie, 4 times this year already, how the market reacts. They go, he said it. Did you hear it? No, I didn't hear him say pause. No, he said it. He was meaning that. He was very dovish, you know. And with Jerome Powell, you just don't know because he tends to not answer questions. Honestly, they'll just, you know, and I don't know if the dot plot's going to come out Wednesday or not. If it does, that's when you're going to know the projections as far as like what they're looking at and stuff. And so, and that's really what everybody cares about. And when the market does do an official pause, you usually do get a bump up, and it would just so happen to coincide with strong seasonality. So can you imagine what the market would actually be doing, which is why you could see, you know, those shorts on the future and stuff's coming up, right? And so that could be why you see that happening. So people kind of preparing for that as well. So again, we'll have to see, you know, and like I talked about the other day, which was China looking so bad. If that's not a bottoming process, people got to put that money somewhere. They're probably not going to put it in European stocks. They're probably going to put it in our stock market too. So that's a whole nother thing. We'll have to see how it plays out and stuff. So anyway, hope you guys got something out of this. Please hit that like and subscribe button. I really appreciate all you guys who are watching stuff. Really appreciate your support. You're the best. And I will see you tomorrow. Hopefully get a lot more movement in the market.